Let's start off with this news from Vanda. Retail investors buying a huge chunk of that Nvidia stock yesterday, 562 million. What do you make of that? On a day like that, to see retail investors dive in?
I know. I mean, there was just carnage out there in the stock market yesterday. It was really a bloodbath with Nvidia down 17%. I mean, we haven't seen losses like this perhaps ever. But if there's anything I've learned from chatting with individual investors the past few years is do not underestimate the power of the buy the dip strategy. I mean, time and time again, individual investors have really piled into the market in times of stress to try to play these comebacks. And that's exactly what we saw yesterday, especially with some of these leveraged funds. I'm thinking of a triple levered semiconductor fund, a triple levered NASDAQ fund. Those were some of the top buys on the Fidelity platform yesterday.
So, I mean, I think we're all thinking about this. You sent this to us earlier today. So it's the SOXL. It's a semiconductor bull 3x shares.
Yep.
So it gets 3 times the performance on the upside.
Not for the faint of heart.
Not, certainly not. And then the triple Qs, similar thing.
Yes, exactly.
3 times. So why, explain this one to me, because I don't quite understand it. The market's going down. Why would you buy a 3-time upside ETF when you know you're going to take 3 times the losses, right?
I mean, these were really incredibly hard hit yesterday. These funds saw double-digit declines, think 30% declines, 50% declines, because when Nvidia is falling 17%, they might fall, say, 50%.
Right.
But this rally the past few years has just been built on a mountain of speculation in triple leverage funds, in options, and we saw that all play out yesterday. A lot of investors were piling into these stocks thinking, if I buy this ETF on a down day, maybe I'll get, that 3x return on an up day.
All right. We had Vanda Research on a few weeks ago, a couple days ago. Either way, retail investors, they beat the market last year, 41%. A lot of people here at CNBC, they were questioning, like, how could retail investors do it? But here's how they did it. They piled in to this AI trade and these really, these big mega cap tech stocks. As we're going forward, does DeepSeek, does that change that sentiment? Does that change that thesis for a lot of these retail investors and maybe even institutional investors?
It's fascinating. I was on the phone with big institutional investors, many Nvidia shareholders all day yesterday. And I think a lot of them were freaking out. I think a lot of investors woke up and realized, hey, we are all exposed to the exact same AI trade. And guess what? This disruptor that we thought was going to change the world, Nvidia, it might be disrupted. What we're seeing as of now is individual investors aren't quite as deterred as perhaps some of those institutional investors were yesterday.
Okay. Not deterred, but I mean, I think everybody has to at least think for a second about the idea that Nvidia has this big moat, that OpenAI is this global leader. Doesn't that at least change the thesis on piling into these names? And are retail investors, are they thinking about the V word, valuation? We talk about it a lot here, but I've never heard a retail investor mention valuation or what a stock's trading at.
I mean, that's a great point. We've seen the equity risk premium, right? The extra reward for owning stocks versus bonds. That fell into negative territory in December for the first time since 2002. And yet we saw continued fund flows into the market that did not deter individuals from piling into the market. Whether that changes now is going to be a really key thing to watch as it pertains to these AI stocks. So far, I think what the data shows us is that a lot of individuals did pounce in to buy this dip. And it reminds me of 2022, when we had this huge technology sell-off, and some of the biggest buys for individuals that year were stocks like Meta, stocks like Tesla, and then they were quickly rewarded the following year.
All right, so you've done a lot of reporting about what some people call the gamification of investing. You've compared it to poker, you've looked at some other developments, and it seems like it's even spread. It's gone from retail investors, especially during that Reddit rebellion, it kind of started there, but it seems like it's moved, maybe return into institutional investments as well. Does this shake that? Does this shake that dynamic where people believe you put money in, it goes up, the markets are safe? Does this change any of that?
I think that's what everyone is wondering right now. A lot of investors I spoke with yesterday said this could be the beginning of more pain in the markets. I think that's what everyone is trying to figure out. Is this a one-day or a two-day thing, or is this the start of a longer sell-off that we see in the market that lasts months or maybe even years? Because let's not forget, this AI trade has dominated markets since 2023.
All right. One other question I want to ask you. I know a trader. He's, an institutional trader. He's big on the Nvidia long, is the triple long ETF.
Sure.
The I want to make sure I'm saying it right. The NVDL, I believe it is. When I look at the chart here, it's up about 90% over the last year. Is there a chance we're making too much of this idea, these levered ETFs? I mean, yeah, it went down yesterday, but people have had significant gains. And we got to remember, the market doesn't just go up.
So it's really important to remember these ETPs are supposed to be trading tools. If you hold on to these for a long period of time, and I think that fund might be an exception, typically you're going to incinerate your money.
Incinerate?
Yeah.
You're not going to lose it.
No, these can just burn a hole in your portfolio if you hold them for long periods of time. I'm thinking of the ETPs tied to the VIX, ETPs, that offer this leveraged exposure. They are typically supposed to be trading tools, which may help explain why you saw people kind of jump in on a big sell-off like yesterday.